Hello and thank you for joining me for this video. RiskVal's risk management system is designed for both risk managers and portfolio managers, so there is a consistent view of risk across the entire firm. This platform is integrated with your book and record system, which manages both positions and real-time trades, so there's a straight-through process to stay up to date with intraday trading. When trades come into RiskVal, they can be organized based on the strategies that your traders prefer, and you have full control to zoom in. So in this test relative value book, we have a rate strategy with several simple sub-strategies below, and traders can see the DV01, the P&L, and the month-to-date and year-to-date performance of each strategy. You can drill down into the sub-strategy to see the position on each leg. And if you go down to the trade level, you can see multiple bullets for each incoming trade, including the current level and the trade price. If you scroll right, you can add additional columns that are important for you. For example, bucket risk against a euro-dollar and treasury curve, carry, roll down, vol, and there's a lot more that you can do. It's fully configurable under this menu where you can manage the column layout to include any of these hundreds of columns that risk managers and traders have requested in the past. The row hierarchy is also fully configurable, so you can break down your portfolio by strategy, currency, trade type, counterparty, or even open and closed positions. You can see our coverage handles the G30 space for rates, FX, commodities, and equities, including exotic structures. Each hierarchy and column layout you create can be combined and saved into a button, so you can quickly switch between start of day, intraday, end of day views, or strategy specific layouts. All of these strategies allow you to zoom in and calculate the VAR. Now RiskVal is known for our clean market data, which lets us do a very accurate full valuation method of historical VAR. But we've gained industry recognition for a unique approach to VAR using a factor-based model. If I select this entire test book, I can see the VAR results on the right for my 95 and 99. And we can scale it to show you the horizon VAR. In addition, we have standard vol statistics, including the 90-day vol, max drawdown, worst 10-day rolling days, number of up and down. And the important thing is that we can break down the source of your P&L into multiple risk factors. This factor P&L is the aggregate of all of the other factors that we see here, which is the risk sensitivity of your entire portfolio to swap rate risk, funding curve risk, basis risk, tightening and widening, swap spreads, CMT, and then Vega and gross basis. All of these combine to give you a total P&L factor history, which can be used to evaluate not only the portfolio performance, but also see exactly where the risk is coming from. Not only that, all the data is available at your fingertips, so it's fully auditable. You never need to worry where your VAR numbers are coming from. The transparency and detailed auditability of these reports are key reasons why risk managers prefer our approach. To supplement the VAR, we have scenario analysis and stress testing. There are multiple ways to look at this. There are standard scenarios that can be defined, bull steepeners and flateners for curve scenarios, rate scenarios, swap spread, even vol skew. And once again, the totals are available as well as the breakdown by trade type, and these are fully configurable in the hierarchy as well. So you can zoom in to any specific trade that you want to conduct scenario analysis. Taking this to the next level, there are predefined stress scenarios where you can define events in the past on a relative or absolute shift method, so you can see how your portfolio would have performed in a Lehman or 9/11 scenario. Front office portfolio managers also like to see the risk in terms of sensitivity to the curve. So we have spot bucket risk, forward bucket risk, which uses the euro-dollar curve, and forward IMM sensitivity points, as well as Vega, Gamma, and all of the Greek breakdown matrices. These risk reports are accessible through the GUI, where we house all of the portfolio manager functionality that can help you determine where the risk is and zoom into the source. There's also a set of back-end risk reporting available for the middle office and fund level. RVPortfolio also has the industry-compliant risk reporting functionality, which helps you communicate with investors and regulators directly. Hedge fund managers and institutional investors aim to communicate their unique portfolio risk through market standard templates like Opera. This improves your risk reporting efficiencies since the system already has all the necessary inputs to generate industry-compliant reports. It includes breakdowns of your portfolio by credit rating, sector, region, maturity, as well as the market standardized reporting sensitivities for VAR, also broken down by asset class, region, and sector, specific portfolio sensitivities, and the stress test scenarios that are most important for regulators and investors to see. Thank you for your time to review the RVPortfolio functionality, and if you believe that we can help you, please do not hesitate to reach out. Thank you very much.